here we're looking at the US 30, and it appears that we're very close to the top of wave 3 here, which would be quite nice and in line with the 15,500 and the old high here. So look, the bias would be for, look, even if there was another little push up through here, which we expect, but we're in corrective area now, so that's probably what we'll see this week. We'll see. Well, earnings season can always produce some sharp sort of shots here and there and so forth, but in the general picture, the old highs for the US 30 and also for the S&P 500 should see some type of profit taking and some type of corrective pattern. If they are wave 4s, well, then we'll see a 38.2 retracement level. For the Dow, that would mean that the 15,300 would be roughly that point there, and obviously that's where the support is as well. So we'll either see a move back down through here, or we'll see a little high up here first, and then we'll see the ABC correction across there. So this is just the 5-minute chart for the US 30, and I was just looking at this down through here, and it does appear that we've got 5 waves down. And this is a corrective rally move here, so it's likely that this is going to be tested further to the downside, and it's kind of what we expected at 15.5, and it's the same with our local market at 5,000 as well. So same for the S&P as well. But the important thing about trading too is that the Elliott wave is one thing, and we would need evidence of a turn in the market, and we don't have that evidence yet. All we're looking at is old highs and in large numbers. So we can expect some type of movement there on that basis. But in staying with the trend, then for the S&P 500 here, we would stay long while the market is above 72 there, so that's that. The Australian, also more so the European market here as well. If the Dow obviously folds back into, is there profit taking going on? Well, then we'll expect that in the FTSE as well, and that would bring us back into the 6,500, the medium level through here for a correction. We can see that we've got a little. We've got 5 waves from this point, and we've got another little 5 waves up here. So now we're seeing that corrective move back in here. We can see that it's come off its highs here, so that's obviously profit taking there as well, and sort of creating the first high above the level really. So let's just see how this wave 4 pans out through here for that, and of course that would be in line with the Australian market as well. For the Australian market here, just on the daily chart here, we've arrived at 5,000 through here. I've seen a bit of selling on Friday, as would be expected. There'd be orders sitting there waiting, but we haven't seen excessive selling here, so it's just very light profit taking. So once again, the trend is up, but at the same time, we're working with a large number, and there's going to be large orders coming in there for different reasons, both on the buy side and the sell side. So seeing some type of correction there, depending on the degree of structure that you're trading and how close that you want to get to the market, then staying above 49.72 would be the, 49.65. Look at that in a moment, but this is just the general wave count here. We've got a nice sort of A, B, and C correction here, and we're looking for 5 waves up. We've got the 1, the 2, and then we're looking for all of this to be the 3rd wave up through here, the 4th, and then the 5th up through here, creating a high, which can take us up to 5,030 or 5,050. This is the current low here at 60 on the 5-minute chart here. This does appear, it looks impulsive, but it's actually got overlapping wave structures here, so it can be corrective, and this looks more impulsive here. So as I was mentioning, while the market stays above the 49.65, then if you want to trade around this large number here, it just can get a bit tricky, but anyway, see how you go. But as long as that low stays in, then stay long above the 49.72 there. Alrighty, let's have a look at commodities. Okay, just starting off with gold here. I might just go to the daily. This is weekly here. So What we're looking for here is as you know, we're in a bit of a rally, and we're looking for from wave 4 up here. We're looking for wave 5 down through here, and wave 5 here, and we're looking for that to be in 5 waves pretty much. So the 1, the 2, down for 3. We're doing the 4th wave now, and then moving down from that point, and the other metals would be in line with that, and probably also the other commodities as well. So let's just sort of drill in here and see where we are at the moment. But once that wave 4 there's finished, and we do expect a little high to be made above the 13,000 there, just at the 1300, rather than just to sort of trap the bulls in, so just be careful about that. But you know you're not supposed to trade the breakout in this particular case. You'll be looking for the retest there, and looking for that you've actually got support there. So, but once that's finished, then we'll be looking for a 5-wave sequence to the downside, and this is drilling in on that particular corrective pattern there. I've just kept it simple in terms of an A wave and the little ABC for the B wave that we're looking for, and then we're looking for 5 waves up for wave 5 up through here. So look, while the market is in group 2 here, then obviously wave 4s can get a bit more complicated, but it seems like it's done enough time there as a wave 4, so we'll be looking for 5 waves up through to here, which can take us into subgroup 1 area of the 1300 there. So once that's complete there, then we'll be looking for that to roll over from that point there. So that should be interesting, and this is it, sort of a smaller chart here. As you know, we've been looking for it to wave 4 to pull back, and so we're looking for a 5 little wave structure up through to here, and that's the same with silver as well. So with silver here, we're looking for we've been looking at the wave 1, wave 2, nice strong wave 3 here, nice perfect sort of wave 4 or an A and a B and a C correction through here, so we should see that chuff up there. It should take the top out there, but it doesn't have to. All it needs to do is have 5 waves in here, so just be mindful of that. It could be really short, it could stretch out. That's why it's always important to count the waves inside the structure first. We can do other things as well in terms of wave 1 here is normally the same as wave 5 here, if the extension is in wave 3, which it is, so we could look at that. But with commodity, sometimes we tend to get the well, not always, but a reason more than stock anyway, we can get the extension in the 5th wave here as well. So that's why it's important with commodities to trade, to count the waves. And silver is a bit more of a speculative stock than gold. If gold moves 50%, well then silver could move 100%. So it's more of a speculative stock. If you're looking for something a bit more stable, you trade gold or palladium or something like that. The precious metals, so base metals are in sync with precious metals, or vice versa. So in an odd little way, we're looking at an A wave here and a B wave here, and we're looking at a C wave up through here, and well, if we consider this the 3rd wave here, we're looking for one more here, the same as the gold, okay? But look, drilling into this little area through here, it just doesn't seem like it's done and dusted to me. So just on this 3-minute chart here, it sort of counts as a sort of a corrective 3-wave structure to the upside here. This is also corrective down. So I'm a little bit confused here, but one of the things was that the market should have pulled back 38.2%, which brought us into the 1313. So we've come quite close to that. That's all been good. So the wave 4 has pulled back the right proportional ratio in this. So we'll just let this play out here. There may just be another little move down through here before we see further upside there. But as it stands, as the A wave, the B wave and the C wave, it's sort of okay. This just doesn't look healthy here. It looks more bearish, a bearish rally more so. So anyway, we'll see how we go with that. And that's important because of BHP and so forth sort of pushing to the upside. So right, oil. So so with oil, we're looking for a 38.2 retracement level back to the 102 area, and look, that could still certainly be the case as well, because obviously if it's going to follow stock, and stock is going to be coming off where it's coming off from the 15,500, then we'll see this as an A wave down here, B wave back to here, and a C wave here. But in saying that, I can see by looking at Brent, which I guess Brent's more related to the not so much the American market, but more so the Middle East market, I guess. But it's moved up quite high here, so it could be sort of leading the way a little bit. See, it's made a new high here, so that's what makes me sort of think a little bit about this here too, because I know it's lagging, but it can pick up from here. So there's a possible, reasonable chance that wave 4 is already in play here. So I don't really know what to sort of say about that at this point in time. What we could do is the 105 across here. If stock does come off, then that 105 is going to be retested. If the 105 becomes the retested resistance here, then you'll know that it's coming further down through here. But once that's been done and dusted, then we'll see it move up into the 5th wave there. So unfortunately, I can't give a clear guidance on if it's going to move straight up from here or finish this little B wave, 5 waves down, and then move up from here. So really drill in on the 105 area through here to work that. All right, let's have a look at FX. Okay, US dollar. So, look, we expect it to come down a little bit further, down into this 61.8 retracement level here, because this move here appears to be corrective, but at the same time, in terms of trading, you would want that 83 as a retested resistance from that point there. And that, of course, would send the euro up higher as well. So with the euro here, we're looking at this up here is the A wave, back for the B wave, and up for the C wave to make wave 2. Now I've just got this little stick here as that whole length of that move there, so I've just got this as a 60 odd % retracement part of that there. So if it moves up here in a sluggish way, then it will only move 60 odd % of that length there. Normally they would have equality, but let's just sort of see how we go. So that would put that at the 133 there. So what we're looking for here essentially is off this low here, we're looking for a 5-wave structure up here as wave C. Once that's completed there, then we'll start. Would need to see a 5-wave structure to the downside to prove to that. But that's not such a big deal, because it's good to get that confirmation there, because the most expensive part of a trend is the top 10% and the bottom 10% in a trend. So it's good to wait for this 5 waves down, then wait for the counter trend, and then start working the order down from that side. That's the sort of area that you want there. Right. So the Australian market, it's well, as I mentioned, coming down into Group 1, it's really this is really a good example of a market. So when markets move, they normally move quite quickly. Well, from what I can observe anyway, the market moves very quickly between the numbers 5 and 3, up or down, and the same to the upside as well between 5 and 8. But when you come into Group 1, especially coming down like this, down into Group 1, because there's always orders sitting at 10, 20 and 30, this is kind of what happens. It can be a really bumpy road, and it's very difficult sometimes to you can get some of the degrees of structure right, but to get them all right is tricky. Is a tricky job, and that's why it's really important to choose a degree of structure, which is basically the degree of price. So the minor levels, sub levels, sort of helpful in trading price, in working with price. But at the same time, we can see that it's broken down into the 90 now. Now, realistically, with everything said and done, is that we can get another little 5-wave structure down through here, right? That's a possibility. But at the same time, once this is landed here and sunk in here, we have to expect a bounce back up from here. That's what we're sort of looking for. That bounce can just come straight back up from here as a B wave low in here, but it also can have we may have got the count wrong and would be looking at this being 1 to here, 2 to here, 3 to here, 4 to here, and 5 to here, and then work up from there. It's a little bit tricky to point out at the moment, but it should come clearer. So this is the move down through here, because this whole move down here is in 5 waves. We could put that as 3 waves here, or we could put it 3 waves here as an ABC. That's why I was giving it one more little bit of room to move, because this can be the 1 here, the 2 to here, the 3 to here, the 4 pulling back up to the 4th wave of 1 lesser degree, and then the 5th wave down through here to finish it. Now at that stage, then we have this down here as an A, B and C down to here, but at the same time that could also expand out a little bit further in terms of a larger wave structure, which would be down for 1, back for 2 here, and then this whole move down in 5 waves here would be the 5 waves down to here. Then we'd see a wave 4 back to here, then a wave 5 down to here. So it could complete like that. That's not our count so far, but just bear that in mind at this stage. So we'll be looking for that low there. But as it stands at the moment, we've got this little picture here. Have I got a smaller picture of it here? Yeah. So this little structure here, we can see that yes, it has bounced off. This is a corrective sideways pattern here. So as long as it can develop support on the midpoint there, then there's a slight bias, reasonable bias, that the market can push up from that point there. Obviously, it needs to work through, needs to develop support on there, and then obviously there's going to be problems all through here. It's going to be a struggle through here if that's going to be the case there to move up there. So we could say support on 72 would get you to 91. As safe as that. But if that became the resistance through here, if this started to develop into a little 5 waves here, then you would know that you would be on the way to the downside at that point there, and it would look something like this, back to the 40 there, back to here, under there, and it takes time to work through these sorts of things through these little levels here. So look, the midpoint is the line in the sand, so if it's above that, then you want to be looking to the upside. If it becomes the resistance, look to the downside, and keep the trading sort of tight in this area. Alrighty, well, that's it. So good morning, good luck, and enjoy the day ahead. Thanks for listening.